put this down. Let me throw this down real quick. All right. What's up with y'all, man? Welcome in. So this is the sesh today. I'm just gonna go over. If you don't know what this strat is, I'm gonna kind of break it down. Very basic. I'm gonna go over like just what these numbers are, what the strat even is, and how I use it and whatnot. So let's get into that. Disclaimer: this isn't really a beginner's course. I'm already assuming that everyone here knows how to trade somewhat. I'm not gonna really go over like the basics. You know, I'm assuming you already know how to options trade or trade equities or whatever you may be doing. Just gotta say that. And then so the strat was created by this guy right here. This guy's Rob Smith. Um, he's still alive. He still trades. He has his own Discord. He does live trading and all that. So just got to give him his flowers, because if he didn't create this shit, you know, I wouldn't be using it. And a lot of people wouldn't be using this technique into their trading style. So with the strat, I day trade. I mostly day trade using it. Starting to swing trade a lot more because of it. It's been panning out really well. And even the market that we're in, I've still been hitting pretty good returns, kind of stress free too. Like really low risk, high reward type of trades is what we're looking for. All right, so what is the strat? In its simplest form, it's just price action trading with candle analysis, actionable signals, and time frame continuity. So what that means is all these right here, these are actionable signals. It's a sequence. An actionable signal is just a sequence of candles that set up, and they play out in certain aspects. Like we have this one's a 2-1-2, this one's a 2-2. So these are just pretty much setups that we look for. So we're looking for those, and then we're analyzing each individual candle with time frame continuity. We're making sure like time on all levels is in our favor. So for grabbing calls, we want the monthly to be green, the day to be green, the weekly to be green, the quarter to be green. You know what I'm saying? Like we want time frame continuity in our favor. That just gives more validity to where the stock may be going. You know, there's buyers here and so forth like that. So I'm gonna go into how we analyze the candles, what time frame continuity is, why it's important, and then what the actual signals are. And then later on, I'm gonna go into like how I use it to day trade, because all this stuff works on every single time frame: the month, the week, the year, the day, the hour. This is all relevant, and you see these things play out on every single time frame. But I use them specifically on the day and the intraday. So I'm going to show you what actual signals are, and then I'm going to go into like the charts and not like that too. So what do the numbers mean in pertaining to the strat? So there's only three types of bars. There's only three types of bars really. So it's just 1 bar, a 2 bar, or a 3 bar. You see this chart right here. We have a 2, a 1, a 2, 2, 2, 2, 3, 1, 3, 2, 1, 2. You only see 1, 2, or 3 bars. And each number, you know, there's a reason why it's a 1, or there's a reason why it's a 2. And that's just really the basics of what a 1, 2, or 3, the type of bars we're looking at. So I'm going to start with what is a 1. So a 1 bar is just considered an inside bar. It hasn't taken out the high or the low of the bar before it. That's pretty much it. You know, the 1 is basically an indecisive bar. Buyers and sellers are at war here. You know, it's going up and down, but no one's winning because it hasn't taken out either side of the range of the previous bar. You don't want to trade 1 bars either, because it's just real choppy. So this plays out a lot more if it's like a weekly or a monthly, and you're trying to day trade, or actually if it's a weekly and you're trying to day trade some shit, or maybe swing a weekly with no actual decision being made, it's just it's not highly probable. You want to wait till we get a direction to trade, take trades instead of just trying to predict where this thing's gonna go. So that's just what a 1 bar is. This one's pretty simple. And then a 2 bar. Oh yeah, let me know if y'all got any questions. Feel free to drop them in the chat right here too, because I might be moving a little quick. But this a 2 bar is just a directional bar. So as we saw, 1 didn't take out any side of the previous bar. A 2 takes out only one side of the previous bar. So this bar right here took out the low of the previous bar before it, which is this one. It took out the low. It didn't take out the high. It only took out the low. So this is a 2 down. Same with the next bar. This is a 2 up because it took out the high of the previous bar, which is this one. It didn't take out the low. It only took out the high. So this is a 2 up. This sequence right here is actually a 2-2 up reversal. Your target would have been here, but I'll just get into that. So the reason we like 2s is that it gives us a direction. If it's a 2 up, like here, we're breaking the high. It's telling us we got some buyers in here. We're going up. Same thing. If we're going 2 down, we're going down. That's pretty much it. You look for the next 2 because that's giving us the direction of where we're going. It's not indecisive. And we could trade those. Oh yeah, 2s are also usually our triggers. So before this bar right here broke the high of this bar, it was a 1, right? It was inside. But once it broke the high, it turned into a 2, and that's our trigger for an entry on calls, I guess. And you would target right here. Once it turns into a 2, that's usually your trigger to get in on a trade, depending on the type of trade you're trying to do. And then a 3 bar is an outside bar. These can get a little trickier if you don't really know how to play them, but a 3 bar basically just takes out the high and the low of the previous bar. Something to note is that a 3 is a failed 2. So if we saw this 2 take out the high, reject, come back down, take out the low, it would go from a 2 to a 3. And if you gotta kind of watch that, because you could have got caught, say actually this thing took out the low and then took out the high. So you could have got caught trying to short it right here, only to see it reverse and probably stop you out or whatever, cut your losses. And this thing went all the way back up to the high. There's a way we can analyze and see if a failed 2 is going to turn into a 3. And it's a thing called a 50% rule. So if this bar is a failed 2 down and it retraces up to like 50% of the previous bar, the odds of it now going to take out the high is very likely. And you'll probably see more buyers start stepping in if we look, depending on what kind of time frame you're looking at. But there is a way to see how 2s become 3s in real time. So does that make sense? Like a 1, a 2, and a 3. Those are like just the basics. Does anyone have questions about that? Feel free to put it in the chat if you do. And then I could break it down a little more, but that's really it. Just 1, 2, and 3s. Those are the only 3 type of bars that we are looking at when we're looking at our charts using the strat. If y'all got any questions, like don't feel free to throw them in the chat, because I mean, we all here to learn. I'm really just trying to help everybody see what I've been seeing in the market. Shit been kind of crazy. All right. So Now we know what the bars are. We know what a one is. We know one is an indecisive bar. There's no direction. We don't trade ones. We know a two is a directional bar, tells us which way we're going. And we know threes are failed twos and they're outside bars, taking out the high and the low. So another thing we have to take into account is time frame continuity. So this little thing right here is just an indicator on TradingView, but basically with time frame continuity, depending on your trade, like if I'm day trading, so usually I'm more looking at the daily, the hourly, the 30. Those are the time frames I look at because my trade is for the day. So you want to look at the time frames that correspond with the type of position you're getting into. If I was in a monthly swing trade, honestly wouldn't really be looking at like the 30-minute. I'd only be looking at the hour, if that, you know. But yeah, if I'm swinging 2 months out or something, I'm not really checking the intradays. Now, if I'm in a day trade where I plan to exit my position same day, I'm gonna monitor the hourly, the 5 minute, the 30, the 15, the intradays. So with time frame continuity, you want the time frames that you monitor to be in your favor. So if I'm running calls, I want the daily to be two up and green. I want the hourly to be two up and green. I want the 30 to be green. I want the 15 to be green. You know what I'm saying? I want everything to be green because that shows me on all time frames we have buyers hitting the ask or whatever. We got buyers in there on all time frames hitting this thing. If I'm running puts, it's the exact opposite. I want all this shit to be red. The market we're in right now, everything's been red, and we've been running puts. You know, so that's just how we take time frame continuity into account. That's that, and then these are actionable signals. So this is where it gets kind of fun because this is where we start hunting. We look for these all over the place, and you'll start to see these everywhere on all time frames once you get more familiar with them. But we know what a 1, 2, and a 3 are. We know what time frame continuity is. So now we look for the setups. The thing about this you got to keep in mind is that the third bar in this sequence is not there yet, right? So like on our chart, we're only going to see a 2-1. Let me give you an example. Let's do PDD. PDD is something I'm looking at. I'll get into later. But PDD, see, we have a 2-1 right here. There is no 2 here yet, but this is this is an actionable signal. So we're waiting for the next 2 on this setup. We're waiting for the next 2. It's either going to go 2 up, it's going to go 2 down. I'm expecting this to go 2 down. We have tons of magnitude right here too, so that'd be a good one. But yeah, this third bar in the sequence is not there. This third bar in the sequence, not there. This one right here, not there yet. Right? So you're looking for like this 3-2-2. This one right here is not there. That's what you're going to be looking at in live time on the live chart. You're just going to see a 3-2, or you're just going to see a 3-2 this way. That's what we look for. So that's what you got to keep in mind when you're looking for plays. But basically, when we get actual signals, we play these accordingly. So these things, depending on the time frame you're looking at, the actual signal can put things back into force. Meaning, say right here we have a 2-1-2 bullish reversal. Maybe this stock was moving up. It went 2 down on the day, had a 1, and then we went 2 up. So this right here would be a bullish reversal into time frame continuity to the upside. If like, you know what I'm saying, that's when time frame continuity plays into account too. Same thing with this 2-1-2 bearish reversal. Say we're 2 down on the month, 2 down on the week, but we go 2 up on the day, right? All time frames is telling us, all the other time frames are telling us we're red, we're going down. But we get a 2 up on the day or on the hour. then it's followed by a 1 and then a 2 back down. So this actionable signal right here, 212, is putting time frame continuity back into 2 down and back in the red, basically. Same thing for pretty much everything else. Now, I'm not really swinging things, so I'm really just looking for the play, like the daily play of this. So I'm looking for 2 1s, I'm looking for 3-2 setups, and I play this bar right here. I'm out when I'm comfortable or my PT gets hit. Um, yeah, these things are everywhere. So we're really looking for these. All right. So now we can day trade using the strat. Some things I didn't go over are broadening formations, which is just price expansion. And what a broadening formation looks like is do I have one set up somewhere? Hold up. Okay. I got one on CLX. So a broadening formation is just like this. It's a higher high or the most recent high connected to the other most recent high, and then recent low connected to the most recent low. This is just price expansion. So right now, it's either gonna break the broadening formation or it's gonna reject right here and come back down. This is the weekly broadening formation. And if we look on the month, I think I have a monthly. Yeah, I have a monthly broadening formation as well. So right now, Clorox is bouncing off of the monthly broadening formation, has a 2-2 trigger to the upside. So our target would be here. Conservatively, you want to have the pivot, so like 162. But broadening formations are, what's the word, man? I forget what the instrument they associate this with, but it's basically just price expansion.
Microphone.
And microphone, that's something like that. I forget what the fucking word is. But broadening formation is something a lot of people use. I don't really use it on my day trades, which is why I didn't really go over it. Cause like on the dailies, I'm really just playing a smaller interval in comparison to the entire move. Like say PDD right here. This is one I'm really looking at, so I'll just keep bringing it up. But see, if we go 2 down on the daily, and we go 2 down on the weekly as well, my target is going to be this bar right here, and the target's going to be $32. I'm not really concerned about a broadening formation right here. I'm just playing this little move. But if you were to look at a broader time frame, you could probably find one like this right here. I would connect, let's say, higher high. Oh shit, higher high connected to, say lower low right there. This one's a kind of ugly one. See the weekly. Yeah, so you could connect it right here actually. So boom, higher high, and then lower low. Yeah, that's ugly too. All right, yep. I ain't gonna get too much into it, but yeah, I didn't go over broadening formations. I didn't go over contract analysis. Contract analysis is a big one too. So depending on your strike price, if you're trading options, if you're trading equities, it's not you're good. But if you're trading options, there's tons of variables. I hope you guys all kind of have a consensus about all the variables. There are strike price, expiration, the Greeks, and I'm going to get into why contract analysis is really important, but I'm not going to really go over it today because that's like a whole nother topic to go into. And I did not go over position management, which means rolling your contracts if you're in options, which just means like extending your expiration date, strangle spreads. Sometimes I use those on my entries just in case like I get a trigger, but it fails, like a failed 2-up. If you're running a strangle spread, your puts, your shorts will cover your ass basically if you enter and something rejects and fails on you. So I didn't go over any of this. These all also play a role in the strat though. So this is how yeah, megaphone. There it is. This is how we find the target for the day. It's pretty straightforward. You're using the previous bar's magnitude as your target, whether it's a 2-up or a 2-down. I gave a 2-up scenario here and a 2-down scenario here. So if it's a 2-up, we target the high of the previous bar, and same for 2-down. So this is the current bar right here. This is the previous bar, and this one is the previous bar. I don't know if there's a better way to say it, but yeah, just the previous bar. So we had an inside day. We went 2-up right here, took the entry. Your target is the upside magnitude. Same thing for the 2-down. That's pretty much it. This is a 2-1-2 setup, but this works if it's like see the actual signals. If it's a 3-2-2 setup, we're still targeting the bottom of that. Same thing with this. Same thing with the 2-2 reversal. You're targeting the previous bar's magnitude, whether it's to the high, to the upside, or to the downside. Now these are like I like playing these. If we're looking at continuations, the RR is kind of whatever, because you're kind of late to the party, but you can still play those. But that's really what I'd be looking for when I'm day trading, is like these type of setups, 2-1-2s, or I'm really looking for 2-1-2s, 2-2s, or 3-2-2s. 3-2-2s are sick because you have a whole bar we're taking out, and I'll show some examples of all these 3-1-2 reversals. Like, I like this top row. I like reversals. Oh shit. All right, so that's just how we find our target once we see an actionable signal. Like I said, this third bar right here is not going to be there yet, right? Third bar, not going to be there yet. But once it does show up in live time, we take that trade, take our entry to the downside, and our target is right there. We're just using previous price action history to get our targets. I don't only use the previous bar. Like, I'll go here and I'll go all the way back over here and see what this shit looking like, you know? So just because over here it's setting up, boom, this is our target, whatever, I'm going all the way back to previous price action, and then correlating it with how it's looking on this side too. But this is actually another good example too, because if we go, this bar right here is not the previous bar, right? That shit has nothing, like this previous bar really has nothing to do with us right now. So it doesn't always look exactly like this. Right here, we're comparing this bar to this guy right here. So if you go 2 down, our magnitude target is going to be down here. We can be conservative. This is the weekly. We can be conservative and keep it right here. So if we're looking at the daily, again, it's not the previous bar like that little picture showed, right? Like 1, 2, 3. This is the previous bar. We're not doing that. The bar we're targeting is these guys all the way to the left. We're already below these pivots. So this bar from March 11th is the one that we are using for our magnitude target. I don't really see there's no other pivots down here. So that's why I want to go back to previous price action just to see, like, you know, what this thing be doing on a daily basis when it gets down to this level. And if we just look at it already, like if we look at this right here, you can kind of say, look right here, boom. There's a point of support right there. Just looking at the price action. If we go all the way back to the right, that's still below both of these triggers. So if you want to be conservative, yeah, you could have like a 333.90. But right now, given what we're looking at, our target technically would be 32.16. Um, go off wicks or bodies. The targets go off of it. Technically, it goes off of wicks. You're going for the high or the low, which would be the wicks. That's your target. Me personally, I'll go off of like the open and close sometimes, just having a conservative target. I consider those to be like pivots. So like right here, that's the open. That'd be a pivot. Same with the close right here, another pivot. And if you kind of look at this also, this thing reacted to the pivot instead of the wick. That's just something that happens like that I do because I like to be conservative with my trades, even though sometimes I leave money on the table. I just don't want to assume something's gonna hit. Like, let's say, so this thing went two up, two down. Technically, your target after this thing went two down, right, on UNH would have been the bottom of this wick right here. But if we're being conservative, I'm doing the pivot right here, and that's literally where this thing hit, right? This is the open, and that was a much better target. Actually, before I get into that though, on targeting, what else? Closing price of high low. This can be false. All right. So before we get into pertaining to targets, how to find my target, where you need to so how to find your plays. We're looking for. I'll get into that in a sec. But for targeting, you need to know the average daily movement of the ticker you're trading. So I consider average daily movement to be the average movement from high to low on any given day pertaining to that specific stock. So for example, let's just use Apple's high to low ranges about $3 to $4 on any given day. And I can show you guys where I'm getting that number from. So this is a daily chart, right? Let's see. So I'm looking at the high to low right here. High, low, HL. High to low right here, 171 to 165, $6. 168, 166, $2. 167, 163. Was that $4? 166 to 163, $3. $6. What is that? 171 to 166. That's $5. 169 to 166, $3. So do you guys see a pattern here? This thing usually Apple on any given day, the differential between the high and the low is about $3 to $5. $6 is a stretch. Let's be conservative and say $3 to $5 on a day. On low volume days, it could move like only $2. So that's something you got to keep in mind when we are talking about targeting. So hold on one sec. Shit. All right, so does that make sense? Right? If does that make sense in terms of the differential between how much I expect a stock to move on any given day? Right? Apple daily movement is about $5, $3 to $5. So I'll give an example of Apple. So let's say we know Apple's daily price movement is $3 to $5, right? So Apple opens up at 160. We're looking at this candle right here. So Apple opens up at 160 right there. The previous bar's high is 161. So right now we're still a 1. All right, so you open at 160. The candle before it, its high is 161, so we're still an inside bar. It drops down to 158, and then this is still an inside bar. We end up triggering the 2 up after breaking 161. The previous bar's magnitude is 165, so that should be our target, right? But we know that Apple's differential from high to low is about $5 on a daily basis. So I don't expect Apple to hit 165 today, given that it dropped to 158. And from 158, um, $5 from there is 163. So if we're expecting this thing to hit 165 target on this daily trade, because once it triggers that two up, we're hopping in this trade. We chose the direction. Technically, our magnitude target is 165, but we know the ADM is only about $3, $4, $5. So you can't expect Apple to hit 165 because it already dropped to 158. Y'all get what I'm saying? So if you're taking this on a day trade, if you had a 165 target, that probably wouldn't be attainable. You want to do your trades. You want to have your targets coincide with something that's actually attainable by the stock in a day. You know what I mean? Like the Apple opens at 160. Ain't no damn way this thing's gonna go to 170. Like it, you know what I'm saying? Like it only moves $5 a day, even if it went two up, here. So if it opened at 160, never went to 158 and just triggered a two up here, then yeah, we probably gonna hit 165 for sure. And then you gotta take like the overall market into account as well. So that's another thing. For when I'm looking at plays, I'm looking at the monthly, weekly, and daily time frame. Plan my trade accordingly, keeping full time frame continuity, sector strength, and current market conditions. So one thing that you really got to do when day trading is seeing if the market is strong or weak today. Where's the trend of the market going to be today? Because for the past week, it's been red. It's been hella red. Pretty easy to see. But we have green days, we have red days. If you're trying to trade puts on a green day, you're kind of going against the daily trend. If you're trying to trade calls on a red day, you're going against the daily trend. You want to move with the trend of the day. And then it's the sector of the stock I'm trading strong or weak. So what I mean by that is that there are all these different sectors in the S&P. There's XLB, XLE, XLF financials, XLI industrials, and then each sector has weighted names in them. So UNP, UPS, this is industrials. The heavier weighted names, I have them listed at the top. And if you're swinging things in this sector, you want to make sure, this thing's green right now, super red. So you want to make sure your swings or the stocks you're trading have sector strength to them, as well as time frame continuity, as well as overall market being strong or weak, depending on which way you're going. And then we know the ADM. This was just a little example. All right, cool. So yeah, hope this made a little sense, right? So if we know the average differential is $4 to $5, we can only expect Apple to hit 162 to 163 today because we already dropped down 158 earlier in the day. And we know the differential between the high and low is usually about $5. So we can't expect 165 to be hit. You could swing this. This is an actual signal right here also. So you could swing this, but like I said, I day trade. I probably would have just took that and then maybe enter tomorrow or something. So this is an example of something from last week. Was coin. You can ignore this cat. That shit was looking good, but market just tanked. But coin had full time frame continuity to the downside with slight conflict on the weekly chart. We play the daily reversals that sends the weekly back into full time frame continuity to the downside. So right here is coin. Monthly, 2 down, 2 down. Weekly, 2 down, but it was a green 2 down. So it's like a failed 2 down. And then daily was a 2 up, 2 down. All right. So let's go to coin. What was that? 421. So matter of fact, if we just look at all the time frames on coin, the monthly already gave us a decision. We're 2 down on the month. So if you're grabbing calls this month, you're going against the monthly the monthly trend, the monthly decision. We're two down, right? But you could get away with it if you're day trading. But yeah, if you're swinging calls and we're two down on the month, you're going against time frame continuity. Same thing on the weekly. If you're swinging calls, we're two down on the week. If you're swinging calls, or if you're in calls, and you see all two down, red two downs, you're going against time frame continuity. You're going against the trend. So this is what I said for. That's why I said we're playing the reversal back down. The daily two down trigger below 144.95 with target 140. So this is this right here, right? This candle right here was not there yet. It just looked like this. So it's a two up, failed two up right here. Um, so we know the month was a two down. The weekly was a two down. So at one point, this red was I mean not red. This red right here was green. Yeah, because it's the daily. This candle right here was green at one point. It was like right here. Um, wait, weekly. Yeah. So the two down trigger was like right here, and our target would have been 140. So daily two down trigger below 144.95 with target 140. Below 145.45 also makes the weekly two down back into force. So it was green, right? So this thing, the weekly went two down, but it kind of reversed back up. So at the moment, the weekly was sitting above its opening price. Does that make sense? Like the week it went two down on the week, but then it shot back up and it was sitting above the price that it opened at on the week. So what we know the monthly two down, we know the dailies two down, but the weekly had a little conflict. So we're gonna play that next day reversal if we see continuation to the downside. So you want to see things like you want to see things break certain spots in unison. That one right there is a trade that we're taking to send this thing back into full time frame continuity. Um, and we took into account our target was 140. It was at 144.9. I mean, that's our trigger, 144.95, and our target is 140. We know the daily average range is about $8, so that was super attainable. And then this thing ended up dumping hella hard, but right here, it triggered right here. This bar right here triggered 144.85, and then our target was this guy right here, which was the low was 140.53. This thing ended up exceeding what I thought it would, but it played out perfectly and it went back into full time frame continuity. Again, we see this is the 3 month, this is the quarter. The quarter is two down, the month is two down, the week, two down. Now, if we see a two up on the daily, we could play that reversal back to down to the downside, but the daily's two down. So what's the market telling us? We're going down. We're going two down. We're selling this shit. But another thing to keep in mind is on the month or just on entire price point, this is at a all-time low. So there's no other pivots that we can go off of, like who knows where this thing's going next. We've never been, it's no man's land right now. That's just something to keep in mind with coin. But and when you're actually looking at other shit too. So when we're at like all-time highs, all-time lows, you got to keep that into account because there are no other pivots, price action history to go off of. You got exhaustion risk, which means that it's at all-time highs. Like people are going to take profit. It might exhaust. It's a little tired or something. But that's how we played that one. So that's something that showed full time frame continuity to the downside. This one was McDonald's. I seen this on Friday actually. and it had triggered. So this was a daily chart right here. So McDonald's average daily movement is $3 to $5. The 2 down was triggered on Friday right here when this broke, and it had a huge bar magnitude to take out right here. Ooh, shit. We had a huge bar to take out right here, and knowing that the average daily movement is $5, we never even tried to wick up at all on the day. So it opened up around 255. Our target for this bar is 250. That's doable. You know, that's attainable given that McDonald's moves about $3-5 a day. So once that thing triggered, I seen it, and then I didn't get in this though, but I just saw it, threw it in the chat, and then later on in the day, played out perfectly. Ended up hitting the previous bars magnitude right here. Our target was hit, and these contracts on the next week's contracts, it was Friday. These contracts went like 90% towards the end of the day. So that's a cool one. These are just like real-time examples from this week that I'm kind of seeing. And then this was an example of a swing position entry. So PG is an XLP. So right here, PG, we have full time frame continuity to the upside. It was a 2 up on the month, a 2 up on the week. What does that tell us? There's buyers here. We're going green. We took the entry above 157.29 on the daily chart. This was the daily chart as well. And it was ready to break out. So that's just another thing. But our magnitude targets were based off of these. This is a monthly chart. Our magnitude targets were based off of these. So the first target were these pivots right here. Your next targets are these higher wicks, the highs. Magnitude target is 160. Next one's 163. Next one's 165. As you can see, it hit the target 160. I got out of there because it was like overnight. This thing went like almost 100%. So I took that. I think I was in like next week's contracts or something. So I took that and got up out of there. But it ended up hitting all the way up to our target of 165. Right, it hit all the upper wicks of this, and this right here is an actual signal. It's a 2-2 reversal. This right here is a 2-2 reversal. That looks exactly like this. It's not a 3, or maybe like this. 2-2 bullish reversal, 3-2-2 bullish reversal. That's an actionable signal right there. So I'm saying these signals, these actionable signals are everywhere. Now this is a monthly though, so on the lower time frames, we had other actionable signals that coincided with our 2 up already. So how do I monitor? So those are just examples. And then how do I enter and monitor a day trade position? So this is where it gets a little more intricate. I wait for the 2 up or 2 down to be triggered on the daily chart. And that one should be pretty straightforward, right? So let's look at something with an inside bar, upstart. This thing never triggered a 2 up or a 2 down. I would never have taken a trade here. That's it. Like if it don't trigger a 2 up or 2 down on the daily, this is the daily. If it don't trigger a 2 up or 2 down at all, I'm not taking a trade no matter what. I'm just not doing it. Why am I looking at that? Let's look at this one. On the daily, I wouldn't have taken this, but it triggered a 2 down there. You got to keep in mind the ADM, right? So that's not really one we would want to take. But yeah, it triggered the 2 down there. You could take that trade. It actually hit its target previous bar's lower magnitude, but we only take trades when we see 2s. That's not the best example, actually. Let me see. Like right here, I guess. Once this thing went 2 up, I'm taking that. What's my target? Previous bar's magnitude. Boom, right there. it was hit. You feel me? Y'all see that? 2 up. We exceeded this bar. Our next target's this bar right here. And it was hit right on the head. If we do the line, it was hit right on the head. I can keep going, right? So I don't take a trade unless I see a 2 up or a 2 down. If there's no 2s on the daily chart, on the daily bar, I'm not in there, you know? So say we do get a 2 up or 2 down in the first 30 minutes of the day. I'm waiting out the first 30 minutes of the morning until 7 a.m. This is for day trading, all right? I'm waiting. Market opens at 6:30 a.m. Pacific Standard Time. I'm not really, unless you want to scalp something, I'm not taking a trade until 7 a.m. 7 a.m. You usually see if it triggered a 2 up or 2 down between 6:30 to 7 a.m., you will see if that 2 up or 2 down will reverse or move in force within the first 30 minutes of open. So what I mean by that is, let me look for something with a reversal. All right, so Apple right here. What is this? April 21st. Let me show you guys what I mean. April 21st. Where's April 21st? Right here. Oh shit. All right, so this is what I'm talking about, right? This is April 21st. April 21st was a 3 bar, was an outside day. It was a failed 2 up that turned into a 3 and it reversed all the way back down. So this is how I'm going to show you how we can kind of how we can gauge if a 2 up is going to fail or if it's going to move in force. And this is why I wait out the first hours of the day, because this thing is kind of many. So April 21st, 9 a.m. It went 2 up on the day, 10 a.m. and then 11 a.m. it reversed. This is a 2-2 reversal on the hourly. I forgot to say, every hour is like a new day. So the first 5 minutes of every hour is the same candle. And then I monitor the 5, 15, 30 and hourly candles. I'll get into this in a sec. But so this is something you got to keep in mind too. Every hour is like a new day. It really, really is, right? So just like I'm saying, I'm not taking trades unless the two down or 2 up is triggered on the daily chart candle. And I'm also monitoring every single hour of the day within that candle sequence, I guess, like on the daily time frame. So where is she at? So this right here, right? Once it triggered the 2 down here, and I go to the hourly and I'm monitoring these hours. So this two down, this one, these are different days from my perspective. They're both triggering continuations, but that's when the 5-minute, the 15-minute, and the 30-minute candles come into play. Because in each hour, there's 2 30-minute candles in 1 hour. There's 2 15-minute candles in 1 30-minute candle, and there's 3 5-minute candles in 1 15-minute candle. It's kind of hard to break that down. I'll break it down. So every hour is like a new day. The first 5 minutes every hour is the same candle. So let's say, I don't know, I'll just use the most recent shit. So right here, this is a failed 2 up, and then we went 3 right here, right? So let's analyze this 3 actually on the hour. So this was 7 a.m., 8, 9. Actually, did this thing, what is this? April 22nd? Oh, okay, gotcha. All right, 2 down on the day. So what did we do on the hour? All right, bet. So on the hour, we got a 3. I kind of all right. Let me go back a little bit because I kind of got off track for a sec. I wait out the first 30 minutes of the morning till 7 a.m. Why do I do that? Is because if we look at the hourly, there's the hourly. If we look at the hourly chart, from market open on the hourly chart, it goes from 9 to 10. Y'all see that? 9 a.m. to 10 a.m. So if we're looking at hourly candles, um, at 10 a.m., we get a totally new hourly candle. And then at 11 a.m., we get a totally new hourly candle, 12 a.m., right? So that little increment of 9:30 to 10 a.m. is like its own little thing. You know what I mean? Like it don't, it's like its own hourly candle and 30-minute candle all in one. So boom, right here, 9:30, we open up and then we get a new hour right here. This is what I'm looking for. So like right here, 9:30, we busted out to 167.84. You could have taken that trade, right? Like if you're looking at pre-market highs, we broke pre-market high and we're it's looking like we're going green on the day, I guess. um, but we definitely didn't. But we can look at, that's when we look at the lower time frames as well. So this is a 30-minute, right? So let's go to the 5-minute and peep out what it did in the morning. Um, right here, look, this is the morning right here that we were just looking at. So right here, we opened up, boom. We opened up at, what is this? 166, and it shot up to 167.86 and it broke pre-market high. You might have hopped in that trade, right? Well, on the next 5-minute candle, we see a 1. That's not a bad sign. However, on the next 5-minute candle, this is a 212 reversal. This is an actionable signal on the 5-minute time frame. This is an actual signal to the downside. All right. So the reason I wouldn't have taken this trade, even though it broke pre-market high, whatever. The reason I would have never taken this trade because on the daily, um, on the daily, we never triggered a 2 right here, right? In the morning, right? It busted out, it broke pre-market high, it busted up to 167.89, but we still never triggered a 2. It was still an inside bar. So I'm not even hopping in that. There's no direction. Now, if this had triggered a 2 up, right? Then yeah, maybe I would have hopped in that with target being whatever. But we never triggered a 2, so we never would have took that trade yet. But even though, on the 5-minute chart, right here, it is showing us like, yeah, we busted in the morning, but then we get an actionable signal to the downside, and then eventually we ended up triggering. Eventually we ended up triggering the 2 down, and that's when and that's when it gives us our direction. We take that 2 down to down here, which would be 163. It did way more than that, but damn, 161. So this thing traded outside of its ADM also. But yeah, we would have had our targets at 163 and probably gotten out once that shit hit. And then if you look at the week, we were already a red week, and then the month is a red month, but it's inside. But this is also a red month. So time frame continuity was in our favor for puts as well on this trade. Um, yeah. Okay, so yeah, wait out the first 30 minutes because as you guys saw in the beginning of the day, like even though this thing looked good in the beginning, we saw reversal, we saw actual signals to the downside on the 5-minute. If we look at the 15-minute, I'm sure we saw another actionable signal to the downside. And so every hour is like a new day. The first 5 minutes of every hour is the same candle. What that means is that when the new hour, when the new hour, the candles open up. So when these new hourly candles open up, the first 5 minutes, it's better if I could show this like in live time because it's hard to explain it. But the first 5 minutes of every single one of these candles was the same on all time frames in the first 5 minutes of the hour. Does that make sense? Like when the new hour opened up, where's it at? Let's go back. Let's say 11 o'clock right here. 11 o'clock right here. Boom, hour flip. We get a new hour. This first bar, this 5 minute bar right here, this thing is the same on all time frames in the first 5 minutes. So on the hourly, on the 30, and on the 15, on the 10, like it's all gonna have the same bar for the first 5 minutes. After that, the next 5 minutes is gonna switch up. And again, we see an actionable signal to the downside on the 5 minutes again, right? So this is another actionable signal, 2-1-2 down. We got another one, 2-1-2, and then boom, straight shit show. So that's why like I really monitor the 5, and then if we correlate this with the 15, shit, it's hard to see where I was even looking. I think I was looking right here. Yeah, 11 o'clock. So on the 15, one new hour opened, peep the 15. We didn't, even though y'all saw on the previous thing, the 5 minute went 2 up right here. Look, where's that shit? Right here, look, 5 minute went 2 up, right? 11 o'clock, 11:05. We went 2 up right here. But if we look at the 15, shit. If we look at the 15, where's 11 o'clock? 11 o'clock. Right here. If we look at the 15, 11, 11, 15, this 15-minute candle never went 2 up. And it's actually another actionable signal, 3-1-2 to the downside. But yeah, this 15-minute candle never went 2 up, even though that 5-minute candle did. So we wouldn't have taken that trade yet either, right? We would have waited till this 15-minute was triggered by the 5-minute, which it never did. But yeah, you wait for the 5-minute to trigger the 15, and then watch. If we go to the 30, it's like a domino effect. The 15 is gonna trigger the 30. So right here, where it's 11 o'clock. 11 o'clock, boom, new hour. We get, if we're watching the 15, we already know how this playing out. And then that 15 had the actionable signal 3-1-2, and then that triggers the next 30-minute candle to go 2 down here. And if we're looking at these intraday time frames, and we know that we're 2 down on the day, it already made a decision. We're hitting this shit. You know what I'm saying? We're getting in this trade, maybe on a lower time frame reversal. So 11 o'clock is just happens to be like a good one to be looking at. But right here, 11 o'clock. Right here, 2-1-2 down, triggers the 15, triggers the 30. You can get in right around here if we're already triggered the 2 down on the day. So I'm getting a little carried away now, but yeah. So basically, if it don't trigger a 2 on either side, that's our first indicator of direction of the day, and that's what we wait for. And then we watch the hourly, because every hour is like a new day. We watch the hourly, and we watch the 5, the 15, and the 30. Now, if you're trading, when it comes to trading options, it gets a little more tricky because like reversals on the hourly, if you're in weeklies, can kind of kill your contract sometimes depending on what day it is, this and that, what the contract's looking like. But that's what I'm saying. That's a whole nother topic. But on the hourly, if you were just looking at the hour and not even looking at the 5, the 15, the 30, where's 11 o'clock? 11 o'clock is right here, right? We went 2-2 down, continuation from 10 to 11 o'clock. And then you just look at the 30-minute. I bet you right here, 11 to 11:30 to 12 o'clock. This is just a 2 down, basically. And that triggers the rest of this shit. So um I hope this is kind of making sense, right? We wait for the daily candle to give us which direction it wants to go, whether it's 2 down or 2 up, right? Once it gives us a direction, once we find the two down or 2 up on the daily chart, it's telling us like, all right, we're 2 down, we're going down today. We're 2 up, we're going up today. We watch these lower time frames. We're looking for actionable signals, and we hit that shit. It's pretty much it, man. And then you get your targets, right? Where how do I find my target? You get your targets from the previous bars. So this one exceeded target, but you get your targets here, right? And another thing that you have to take into account is the average daily movement of the differential between the high and the low, right? So let's look at this setup right here. This is a 3-2-2 reversal. It actually ended up playing out. It took out this whole bar. That's your target right here. You would have taken your profit, even though this was all red. It still played out technically. But see, this is a 3-2-2 reversal. This one triggered the 2 up right here. But the low was 163. From 163, if we know the ADM is $5, you cannot expect it to hit 171 to on this day, even though it triggered the 2 up and your previous bars magnitudes right here. It went as far as 163. So from 163, $5, your best bet's gonna be 168. Where did we close on the day? 167 point whatever. Right? That's why you got to take into account the ABM, the daily average movement differential between the high and the low. Even though this triggered and ended up playing out on the daily, it did not play out. I mean, it did not, like, you would have never hit this shit on the daily. And on the next day, it was a little choppy right here. But that's all I'm saying. You just got to know that. And that's pretty much how I've been using this shit on the intraday. I'm really just waiting for the direction to be given. I'm not predicting. If it's a 1, we stay away. Once it gives us the 2, we trickle down into the smaller time frames, and we just look for the 2s. We look for the 2-1-2 setups. If we see a reversal, like yeah, hold on. There was a reversal. I know there's a reversal somewhere right here. So this is a 5-minute reversal on the video, 2-1-2 setup, and then we had all these pivots to hit, and boom, we hit them. If you see something like that setting up, then yeah, you gotta be mindful of that as well. But see, on the day, I'm pretty sure this was still a 1, so you just gotta be careful of that shit. But yeah, so we just watch the lower time frames. We look for continuations and reversals. We have our target. We have our targets. We know how much this thing moves in a day, so we know our targets are attainable. And then we just watch. Honestly, you could just watch the hourly, to be real. You just watch the hourly. If you were looking at this shit, you wouldn't even have tripped because this is straight 2 downs. And that's pretty much it for that shit. Like, it's pretty much all I've been doing. If it go into contract analysis, it gets a little different. You got to know how to play this shit. So I play weeklies a lot of times. So reversals on a weekly contract affect that contract way more, especially if you have out the money strikes like I usually do. So that's why you just got to know how to play it. You can get like next week's or monthlies, and that shit'll be cool, but you won't really see as much of a gain if it moves in your favor. You'll get like 10% or whatever, but on a weekly, man, you could hit like 50, 60, 100% sometimes in a day just because of the volatility and shit like that. So we can talk Sunday. What are we looking for? All right, so let's just get into the charts now. Does anyone, let me see. Boom, boom. Does anyone have any questions so far? Like, that was a shitload of information, and I feel like I kind of rambled a little bit. So if y'all got any questions, throw them into the chat, or feel free to like put your mic on and ask away.
Yeah, hey Christian, that was a good first sesh. I guess yeah, Drew Knox just asked them, how do you handle your stops in a sense where if you get, let's just say,
Okay.
faked out off a 3 bar?
Yes. So that's the cool thing about the strat is that we so that that can get a little tricky sometimes because if you're in options, if you're trading options, depending on the type of contracts you have, when something reverses against you, if you're keeping like a 20% stop, 30% stop, that shit can get hit pretty quick because you're in weeklies. So that's when kind of contract analysis plays in a role. But to be honest, I don't really keep a stop really. Like I'm mainly just looking for an actionable signal reversal. So if I'm in a day trade, obviously right here we have no actionable signals on a reversal. These are all just two down. So that's a bad example. But let me see. I can't think of it. But basically, yeah, I don't really keep a stop loss, to be honest. I'll just be monitoring, like I said, I'll monitor all the time frames, and if I see if the 5 minute reverses, I want to see how that hits the 15, and I want to see how that 15 is going to affect the 30. And if that 30 ends up like right here, look, so this right here could have been a reversal, right? This is the hourly chart. This could have been a reversal. So depending on where you got your entry at, um, Juma, I'll get into that just a sec. Depending on where you got your entry at, you would have been in profit and most likely just move your stop up if you are doing a stop so that you don't let a green trade turn red. But to be real, like, yeah, this could have been a reversal, right? So two, if we went two up on the hour here, I probably would have got out of that trade because then our targets are gonna be these pivots up here, these guys right up here. And that's kind of why I brought up Nvidia, because that's kind of what happened on a smaller time frame. We had straight two downs, and then we had a 2-2 reversal right here. That's an actionable signal. 2-1-2. We have magnitude to hit. Our next bar just took it all out. All right, so that is something you got to look at. Um, Depending on what was this? This is early in the morning, so I'm not. I don't remember if this day triggered a two up or two down, but depending on what the direction of the day is, right? Depending on what the direction of the day is, um, what am I trying to say? That should give you a consensus on whether or not you maybe just got a bad entry, or you got a bad entry, or usually could be a bad entry to be real. Because if this is a 1, you shouldn't even be in there, right? But if it gave us a 2 down, for the most part, that shit should play out. But yeah, if you got a bad entry or you just so happen to get in on a lower time frame reversal, you just, I guess, just cut the shit. I don't know. You could keep holding it. It's really hard, man. It's really hard to kind of explain that because I don't really use a stop loss anymore. Most of the time, once my trades go green, I'm moving my stop up so that I don't get stopped out of the trade. I don't let the trade go red. But me personally, yeah, I just let the shit go. So like right here, we have straight 2 downs. I'm pretty sure. Let me do this real quick. We triggered. Where's the trigger at? All right, so our trigger right here is this green right here on the day. All right, so let's go to the 5 minute. So all right, check it out. So we trigger down here. We have a 2-1-2. All right, this is not a bad example. So we triggered the 2 down here, right? This green line is the trigger for the daily 2 down. We trigger down here, but we see a 2-1-2 reversal on the 5 minute time frame. If you entered right here, what is this? 165.92. Below that is our entry. Technically, we'll use this bar. So it'd be 165.81, right? We drop down, we come back up, 166.56. It's really, really improbable. Hold up. What is this? 10, 10, 11, 11, 11, 11, 30. All right. So you see this, right? 2-1-2. We see this thing stagnating, kind of reverse. Let's look at the 15. So if you're thinking like, oh shit, I'm about to get stopped out, something that could keep you in this trade, you got to look at the other time frames. So let's see, what was that? That was 10:30. 10:30 right here. We had a 3-2-2 down. This was our entry right here. That next 15-minute candle went all the way up to 166, but then boom, we get an inside bar. We get another try at 166. We get another inside bar, and then we get a 3-1-2 down. If we look at the 30-minute time frame, what time was it? 10 o'clock. On the 30-minute time frame, we have a 2-1-2. This is a really, really failed 2-1-2, horrible. And then you just get a 2-1-2 down again. So on the lower time frame, yeah, it looked bad. It looked like a reversal. And that's what I meant by it could have just been a bad entry. Right? Like if you entered down here, yeah, your contracts probably would have got eaten up and you might have got stopped out. But if you're looking at the direction of the day, right? The day told us it's going 2 down. It gave us the direction it wanted to go on the daily chart. We got in on the intraday. We got in on the intraday price. What the fuck am I saying? We got in on the intraday movement, which is right here. But price is telling us it's going down. So something for seeing if this is going to reverse on you is if this thing retraces up to 50% of the previous bar. So if we look at this is called the 50% rule. It was created by Sarah the Strat Sniper. So 168.72, that would have been our confirmation. So if price broke out above 168.72, that would have been our confirmation that this 2 would have turned into a 3, just like this right here. So let's look at this 3 actually for an example. Oh shit. All right, I'm gonna delete this real quick. So let's ignore this one real quick. Let's look at this 3 as an example right here. This 2, 3. So how do we know that this 3 is gonna turn into a 3? We look at the previous bar's range. That 50% rule brings us to 167.49. That's the 50% line. So this thing went 2 up. It actually hit its target also. And then it retraced all the way 50% of this candle, which is 167.49. And once it did that, you can almost assume that it's going to go and take out the low of this candle as well, which turned it to a 3. If that doesn't happen so like that didn't happen here. So honestly, I would have held this trade because like I said, we got the direction of the day. It went 2 down. This is a small reversal on an intraday time frame, which if you're looking at the entire move of the day, it's very minuscule in comparison. Like what was that? 11 o'clock. If you just look at the hour right here, so that whole little 5-minute, 15-minute, 30-minute, 5-minute, 15-minute reversal. Oh fuck. Right here, this whole little reversal right here, 212 up, blah blah blah. That never triggered anything on the hourly, on the bigger time frames. So that technically on the hourly, when this was going on right here, all this corrective activity, when that was going on the hourly, where was it? Right here. On the hourly, this was just inside. This was an inside bar on the hourly. If you were looking at that corrective activity right there on the hourly chart, this was just an inside bar. No decision made yet. So that's why I said every hour is like a new day. Because this thing never gave us a decision, 2 up or 2 down. I mean, it did eventually, but when that corrective activity in the beginning was happening, it never gave us a 2 up or 2 down. So technically, maybe your contracts probably would have got eaten up if you got a bad entry, because you would have got an entry at 165 and it went all the way up to 166. And if you had, say, our target was 160 whatever, your out the money contracts really would have got eaten up, maybe like probably about 20%, to be honest, depending on the day, Monday, Tuesday, Wednesday, Thursday. And if you have Friday's expiration, there's a whole bunch of shit that plays into that. But you never got an actionable signal to get out of this trade. You know what I'm saying? So that's why I really don't be using stop losses too much anymore, because you just got to know how to read the chart and know when to stay in and when to get out. So if this thing went 2, it was inside and maybe it triggered the 2 up here, yeah, that would have been ugly. I might have had to get out of that. But the reason why I don't think that would have happened is because it gave us the direction of the day. It went 2 down on the day, right? So I don't think that's gonna happen. This shit is not 100%. You know what I'm saying? It could happen. Who knows? But it gave me the direction of the day. It's telling me it's going 2 down. I'm expecting it to go 2 down. We're looking at the hourlies. This 2 down, 2 down. So with stop losses, it's kind of iffy. I hope that helps answer that one. Yep, exactly. Check for validation on the other time frames. So that, yeah, this was just an inside bar when all that shit was, when it looked like it was about to reverse. You check the higher time frame and it's not. And then that's when time frame continuity comes into play too, because we're red on the day. Actually, we were red on the day. It was red on the hour. I mean, it was green on the hour for a sec, but that green hour, inside hour, was going against time frame continuity on the day and probably on the week, I think, because we were 2 down. So that's that. Do you interpret green 2 downs differently than red ones? Yes, for sure, for sure. So green 2 downs and red 2 downs are actually cool ones to play, and I'll tell you why. Um, so right here, 3-2-2 bearish reversal, 3-2-2 bullish reversal. This is a red 2 up. This is a green 2 down. We play that reversal. That's we look for those. We actually we be looking for those. That's a not like reversal plays have really good RR, risk to reward. And it gives you clear targets as well. So I'm trying to see, do we have any like red 2 downs or 2 ups or green 2 ups? I'll see if I can find an example real quick. Oh, okay, right here. Look. Right on D, Paul. Do your thing, bro. All right, for sure. We'll wrap it up in a sec. But yeah, let me just get into, so like this is a green 2 down. This thing triggered 2 down. They reversed. Our target on a 2 up, if this triggers, would have been our pivots up here. So you love like green 2 downs and red 2 ups. We love those because those end up being reversal patterns right there. Yeah. So that's it. That's pretty much a really, really quick introduction to the strat. Some shit I'm looking at real quick before we wrap it up is Clorox CLX. This is what the monthly is looking like. Hold up. These are things that I'm just keeping an eye on. But yeah, see, check this out. Clorox on the monthly time frame triggered a 2-2 up, and our target is gonna be this bar right here. Now, if we go to the weekly, this would be a swing trade, so you got to know how to manage that shit. If we look at the weekly, if this week, next week goes 2 up from this 3, we got a huge magnitude bar to take out. That's CLX. This is UNH. We got a 2-2 reversal with a 3 bar right here, so we still have a bunch of magnitude to the downside to take out that. If we look at the daily, we got a 2-2 on the daily. If we go 2 down here, that triggers the weekly 2 down. Our targets are going to be what we saw in the week. I just want to show PDD real quick as well. This got a 2-1 setup. It's got a 2-1 setup. If we go 2 down, we trigger the daily 2 down, the weekly 2 down, and then we have tons of magnitude target right here. PDD also can move about $3 to $4 a day on average. So 32 from 34 is definitely attainable for a day trade. Just got to take into account overall market. Futu, we got a 2-1 setup. If this goes 2 down, there's a bunch of targets to hit down here. Let's look at the week. Oh, man. This shit looking good. So, look, this sequence is going to try to take out this entire bar right here on Futu. So if we trigger the 2 down, let's look at the month. Are we already a 2 down? All right, so we're a red 1, but I mean we have time frame continuity to the downside. We have a 2-1. We're red on the month. We are red on the week, and we are red on the day as well. If we go 2 down next week, we got a bunch of targets to hit, maybe $25. You know, that's just another one to keep in mind. Someone had put Billy in the Discord. Billy's looking pretty good. This is the weekly on Billy. We got a 2-2 continuation. Again, we are taking out this bar right here. We go to the daily. It's got a 2-1 setup on the day. 2-1. So we're looking for the next 2. If this goes 2 down Monday or next week, we can infer we're about to hit these targets down here. That's pretty much it, y'all. Like, you know, we see the setups, we don't predict, we just react, and then we trade them accordingly. So food, you got to keep in mind, Billy, how much is it moving a day? 20 bucks, moves about $2 a day. Yeah, let's say $2 a day. So if this goes two down, your first target is probably gonna be, what is that? Like 20 bucks, let's say 20 bucks. Hit this first pivot right here, and then the next one. So you would probably want to swing this one with like a month out contracts or something, just because it don't really move like that. And then if you want to look at, we could take a quick look at SP, at SPY, the daily. I mean, this one is a bunch of shit going on here. But if we look at the monthly, we are red on the month. We have a 2-1 setup on the month, and we are red. So we're red on the month. No 2 on the month yet, though. We are red on the week. We have a 2-2-3 continuation setup. We're taking out this bar right here from March 14th. Our targets are going to be like 420, 419, some shit. Yeah, like 420. If this thing goes 2 down, if it goes 2 up, we don't play that. I mean, if it opens inside, there's no decision. We don't really want to play that. This shit right here, yeah, with 2 down. There's a lot of magnitude to take out down here. There's a lot of pivots actually, but these are huge bars. So depending on how market opens this week, we could see a lot of choppiness still, because we could still be inside right here. Same thing with Qs. The Qs on the weekly time frame. Shit, we still got some magnitude to hit. Oh shit. All right, Joel, right on, bro. We got magnitude to hit down here. Still got some targets to say be conservative, like 320 something or whatever. What is that? 323. So we're just looking for the next 2, y'all. That's pretty much it. We're just looking for the next 2. Once it gives us the decision, we find our targets. We see, are those targets attainable based on the average price movement of that stock. We analyze the contracts. We see if time frame continuity is in our favor. If everything's red and we're planning on throwing puts, we have time frame continuity in our favor. Once all those things line up, you run that shit, and then you just analyze your position and play it accordingly. You know, I'm not getting into basics like risk management, you know, how to trade this and that, but you definitely got to take all that into account as well. So let's wrap this up. That was a whole lot of information, man. If